very good evening, guys. After completing the first part of this chapter, inventory valuation, now inventory it is divided in two parts. Valuation, what we did earlier till the last class, and now we take the second part of this chapter, that is inventory or stock reconciliation statement. We call it as reconciliation statement. The concept is similar to what you all have done in FYGC, that is bank reconciliation statement. Now in the sheet what you all have, the second part is there, but what I have done now, I have made 4 basic sums to understand the concept. Now when I say basic, this level also can come in your exams. Now I'll be very honest with you, your FYBAF, BCOM, both are your college exams. There are few colleges who don't do this chapter only, to be honest. But I don't want to take a chance. I'm going to do this chapter. Of course, we don't have to do advanced level as compared to your FYBAF and FYBCOM level, but we cannot skip it. Okay, so what I'm going to do in this session is, I have made 4 extra questions. If possible, all 4 in one video, or I'll split 2 in each videos. Okay, now what do you mean by reconciliation? Let's discuss that first. The name of the part is reconciliation statement, that is stock reconciliation statement or inventory reconciliation statement. Now listen, understand the basic funda. Let's assume your year is ending on 31st March 22. Your year ends on 31st March 22. Now what will happen? We will prepare trading P&L and balance sheet on this day. Whatever you all have done last few days, preparing the store ledger, FIFO, weighted average, let it be periodic or perpetual. Whatever value of stock you get, that goes in the balance sheet. Okay, now listen, let's take 31st March ko, your closing stock ka value is 1 lakh. This, when you prepare your final accounts, you will put it on the credit side of trading account and on the asset side. Now what will happen? We got the value on 31st March 22. Now when it comes to practical life now, especially those companies which have huge volume of transaction, for them it is not possible to physically value the stock on 31st March. See what happens? You all have prepared store ledger. Same time whatever is appearing in your store ledger, that you have to compare physically. Example, 31st March ko, your store ledger says 10,000 units. You have to see physically whether 10,000 units are there. Your physical stock has to match with your store ledger stock. This exercise, where the company is a medium scale company or a big company, it is not possible to do on 31st March. So what happens? There are 2 possibilities. Understand this. My date is 31st March. First case mein, the company takes the stock before date, and second case mein, company takes the stock after date. Now when I say before date, my year ending is 31st March. Instead of taking on 31st March, company will take few days before. Say for example, they will take it on 25th March. And after it, they will take it, say for example, after 31st March, that is 5th April. Okay? Now, company takes the stock, let's take first before date, on 25th March. Now 25th March ko, your stock is 50,000. Okay, this is what you have calculated. Now, when I prepare the balance sheet, I don't want 25th March ka stock. My balance sheet ka date is 31st March. So I want stock of 31st March. So what will happen? Company has done the stock taking on 25th March, but they want a figure on 31st March. So whatever transactions have occurred between 25th March to 31st March, whatever transactions have occurred between 25th to 31st March, that you will have to adjust to this 50,000. Transactions done connected with stock in this period 25th to 31st March, you have to adjust to this 50,000 and get the figure on 31st March. Similarly, when I say after date, after 31st March, my next day is 1st April. So if it is after date, whatever transactions you have done from 1st April to 5th April, that you have to adjust and then get the figure of 31st March. Now, how to do the adjustment, that I will do in the sum. Again, I am repeating, the concept of reconciliation comes into picture when the company takes the stock either before the date of balance sheet or after the date of balance sheet. In this case, I give an example. 25th March को company has taken the stock, but when they prepare the balance sheet has to be prepared on 31st March. So the transaction between 25th March to 31st March, you will have to adjust to 50,000 and get the figure on 31st March. That is called as reconciliation. Similarly, vice versa, if the stock is taken after date, I want balance sheet ka figure on 31st March only. They have not taken the stock on 31st March, they have taken it on 5th April. So transactions done between 1st April to 5th April, I will have to reconcile. Got it? Now, how to reconcile? Let's take first before date. I am just focusing on before date. After that, I will come to after date. Okay? Understand this. Once you get the concept, the sums solving part becomes very, very straightforward. Okay? Sticking to that same date. 25th March 22 को you have taken the closing stock का figure 50,000. But I want balance sheet का figure as on 31st March. So what you will do? You will adjust the transactions between 25th March to 31st March and get the figure. Now listen, one by one. You have taken stock on 25th March, but I want stock on 31st March. Now the first four sums which are there in the sheet in front of you all are covering only four transactions: purchase, purchase return, sale, sale return. There are other transactions also which will come, but today, to make the concept clear, I am focusing on this. Now tell me, 25th March to 31st March, this same date, I have purchased some goods. I have purchased some goods. Say for example, the value of those goods purchased is 20,000. Now my stock is 50,000 and the period 25th March to 31st March, I have purchased goods of 20. Now when I say the transaction has to be adjusted to this 50, there are two ways. Either add it to 50 or subtract it from 50. Now what is to be done? Very basic, apply common sense. I have purchased goods from 25th March to 31st March 20,000. My stock taking is done on 25th March 50,000. Now I want the stock on 31st March. So can I say if I have purchased after 25th March, this 20,000 is not included in 50. So what I do? Whatever is the goods I have purchased from 25th March to 31st March, I will add it to that 50,000. Why? Because 50,000 is as on 25th March. I want the stock on 31st March. So whatever I have purchased, I will add it. So on 31st March, this 20 ka purchase is made, which is not included in 50. So 50 plus 20, my stock becomes 70,000. Had you taken the stock on 31st March, this 20 would have been included, na? Because you are taking the physical counting on 31st March. But I took the stock on 25th March. So 25th to 31st, whatever is the purchase, I will add it. Clear? Next thing. Purchase return. Say for example, there is purchase return of 5,000. When I purchase, I get goods. When I return, goods go out. Purchase was coming in, so I added. Now, after this taking of 50,000, stock taking of 50,000, I have returned goods of 5. So can I say I returned matlab goods went out? So in order to get the correct stock on 25th March, 31st March, what I will have to do is, I have to deduct. So after these two transactions, my value will be what? 50 plus 20, 70 minus 5, that is 65. Getting it? This is the way you will adjust. This is called as reconciliation. Of course, you'll have to present it in the form of table, which I'll do in the next 5 minutes. Got it? I'll repeat again. Goods of 20,000 have been purchased after 25th March till 31st March. Not included in this. So add it. 5,000 ka goods I have returned. It's gone out after 25th March. Not included in 50. On 31st March, it is not with me. So deduct it. So 50 plus 20, 70 minus 5, 65. Let's come to now sale transaction. Let's say for example, I have sold goods. My sales is 30,000 in the period. My sales is 30,000 in the period. Now, tell me what you will do. On 25th March, my my closing stock is 50. From 25th to 31st March, I sold goods worth 30. So tell me, on 31st March, should I add this 30 or deduct? It is gone out. After taking the stock, goods have gone out. If they come in, I will add. If they go out, I will subtract. Same thing sales. Can I say it will go out? So what I do, I will deduct. But remember, very important point for sales and sale return. When I sell, definitely I'll add profit and sell. Na? Because if I'm selling at the same price at what I buy, what is the need of doing business? So you will have to find out what is the cost of this 30,000. You will not deduct 30. 30 is my selling price. What you will deduct is cost. I'm assuming my cost is 25. So I will not deduct 30, but I will deduct cost. How to get cost? In that also there are two variations. Both the variations have been covered in this particular 4 sums what I have given. Got it? So I will deduct the sales because after 25th March I have sold, so goods have gone out. So if goods have gone out, my closing stock also will reduce. But when I deduct, I will not deduct the selling price because closing stock is recorded at cost or market price, whichever is lower. So I need to know the cost. 30 includes profit. I am assuming the cost as 25. So you will deduct 25,000. Next, after sales, now I come to sales return. Again, sales return also I have to take it at cost. Say for example, the selling price of sales return is 5,000. I am assuming the cost as 4. Now the question is, first we have to decide whether to add or less. Tell me what you will do. Very simple. I sold goods. Goods went out. Now the customer is returning the goods back to me. So can I say it is coming in? So this 4,000, not the selling price. This 4,000, which is the cost of sales return, is coming back. I took the stock on 25th March. Between 25th March to 31st March, it came back to me. So my closing stock will increase. Therefore, I will add it. My closing stock will increase. Therefore, I will add it. So, purchase add, purchase return minus, sales return add. But when I deduct the sales and sales return, I will deduct or add at the cost price and not the selling price. So now what will happen? Check. 50 plus 20 minus 5, I got 65. 65 minus 25, I have to deduct. Gives you 40. 40 plus 4. Now my closing stock becomes 44,000. So when you make the balance sheet, the stock will not be 50, but it will be 44 as on 31st March. It will be 44 as on 31st March. So in my balance sheet, stock will appear as 44. So what happened? How I got from 50, how I arrived a figure of 44 from 50 after adjusting this. So this is called as reconciliation. Reconciliation means adjusting the value of stock on the day when you took it till the day when you are going to prepare the balance sheet. The same thing we will have to present it systematically in a table, and we have to see how we arrive the figure of cost of sales and sales return. That we will now study. Now what I have explained you right now is before date. Opposite thing will work for after date. But what is there? There are 4 sums. What I have done, I have made it in a very systematic way covering varieties. So there are 2 sums which are before date. There are 2 sums which are after date. And in the 2 sums of before date, there is a different calculation for finding out the cost. So there also there is a sub variety. So what I am doing now, I am not getting into after date. Right now I have discussed before date. Let's take the first 2 sums which are before date. After that, I will discuss after date and I will do the sums of after date. I am just pausing the video. I'll just rub it out and I'll be ready with the format so that I don't waste time in making the format. Okay, I'll just be back. Okay guys, continuing with the first sum. Now in this session I am taking the first 2 sums. The third and the fourth I will take it in the next video. Okay. Now see, as I told you, question 1 and question 2 both are connected with before date. The difference between the 2 is, first case mein the percentage of profit is on selling price. Second case mein the percentage of profit is on cost price. Okay. Let's start. Let's read the sum. From the following information given by X and company, find out the closing stock as on 31st March 22. Now they have taken the closing stock on 25th March. We have to get on 31st March. They have given you transactions, purchases from 26th to 31st March 25,000, purchase return for the above period, sales during the above period, sales return for the above period, company charges profit of 20% on selling price. What I discussed with you all, when you record sales and sales return has to be at cost, but it is at selling price, so we need the percentage of profit to arrive the figure of cost. Okay. Now see how we will prepare the statement. Your heading will be this. Question number 1 is the reference of question number. Name of the company is X and company. So stock reconciliation statement. You can also call it as inventory reconciliation statement for the period 26th March to 31st March. Why 26th March? Because you have taken the stock on 25th March. At the end of 25th March, you have taken the stock. So whatever transaction you have done from 26th March to 31st March, you will have to adjust it. Okay, let's start. Your table will be particulars and double column of amount. For these first 4 sums, the length will be of around 10 lines. Okay, I'll repeat. Heading stock reconciliation statement of X and company for the period 26 March 22 to 31st March 22, particulars and double column of amount. Before I start, you can just pause the video, make the format and then continue watching. Let's start. First, you need a base of closing stock. So they have taken 25th March ka stock as 1 lakh. So write like that. Closing stock 25th March 2022, 1 lakh. Closing stock as on 25th March 2022, that is 1 lakh. Okay. Now, as I told you, this is my stock on 25th March. I want my stock on 31st March. So what I will do, I will make adjustments. There are two ways of making adjustments, either add or subtract, like your FYJC BRS. First thing what we will do is, we will make the additions. Add. Okay. Now, let's take one by one. What we will do, there are 4 items. First, we will finish off additions. After that, we will take the deductions or subtraction. See the second transaction. Purchases from 26 March to 31st March, 25,000. Now, I already discussed in the starting ka theory, again I am repeating. We are reconciling the transactions done from 26 March to 31st March. We are reconciling the transactions done from 26 March to 31st March. Now, this 1 lakh is my stock on 25th March. Now, from 26th to 31st, you have purchased goods of 25,000. So, can I say during that period, goods have come in? So, goods have come in, so it will increase my closing stock. So, what you do? Write it. Add first, because there will be more than that. Purchases, put in the first column 25,000. If there is only one addition, we will put it straight away in the second column. But if there is more than one, we will put it in the first column. Now see, I discussed purchases you will add. Next is what? Purchase return. Now can I say purchase return goes out? This is before date. Right now the first two sums are before date. So I am not discussing anything connected with after date. Because after date mein the concept will reverse. Okay? You have returned goods. So can I say I have returned goods matlab given back? So you will reduce it. That will be deducted. But first what I told you, we will take all the additions. So purchase return, keep it pending for some time. Next, sales during the above period 40,000. Again, purchases, goods are coming in, I have added. So what comes in, I am adding it. What goes out, I will subtract. Can I say sales also goes out? So I will subtract, keep it pending. Next, fourth, sales return for the above period 10,000. Sales return for the above period 10,000. Now sales return. When I sell to the customer, it goes out. When it is being returned, it is coming back. When it is being returned, it is coming back. So because it is before date, it is coming back, it will be added to my stock. So right here, second, sales return. Now listen, you will write sales return, but what I told you, this figure of sales return of 10,000 is at selling price. The figure which you will put here is cost, because you will sell goods to the customer at a profit. But when I take my cost, it will be at cost. So now, see the information given there in the 6th point. Company charges profit of 20% on selling price. Now see, sales return 10,000 is your sale price. Profit is 20% on selling price. Amount also is sales. Percentage of profit is also on sales. So your calculation becomes simpler. In the second sum, we'll have to make a working note. But here, there is no need to make a working note. So what you will do, I am showing it in brackets. My selling price is 10,000. This 10,000 includes 20% profit. 10,000 is at sale price. Percentage of profit is also sale price. How much it is? 20%. So what you will do? From 10,000, deduct 20% profit. 10,000 का 20% is 8,000. 10,000 का 20% is 8,000. So here I will add 8,000. Getting it now? Don't make a mistake of writing 10. 10,000 is my selling price, which includes profit. I have to record here cost. So therefore, I will add the cost. 10,000 is my selling price. Profit is 20% on selling price, sales. So 10,000 ka 20% is 2. 10 minus 2, 8,000. Got it? These were the two additions. So now what you do? There are two additions. 25 plus 8. In the line of 8, take the total, that is 33,000. And now what you will do? 1 lakh plus 33, take the total of the second column, 1,33,000. Take the total of the second column, 133. Clear, guys? Now, we did addition the part. Now we will take the deduction, that is subtraction. Now we will take the deduction, that is subtraction. Okay? Take the first deduction. Now see, first and the second point are done. What is the third point? Purchase return. We are on before date. When you buy, goods coming, I have added. Why? Because I want stock on 31st March. So whatever has come between 26 March to 31st March, I will add. Now when I say purchase return, after purchasing, I have returned in this period. I have returned in this period, so it is going out. So therefore, I will subtract. So first deductions right there. Purchase return, that is first column may write 5,000. Purchase return, first column may write 5,000. Clear? Now what is pending? Sales. Second, sales. Why we will deduct? Understand, again I am repeating. What I added? Purchase and sales return. Because when I purchase, goods are coming in. Sales return. On sales, goods go out. Sales return, goods are coming in. So purchase and sales return may, because the goods are coming in, I am adding it back. Purchase return, purchases go back, so I deduct. Sales go out to the customer. That is the reason I will also deduct sales. So when it is before date, purchases and sales return will be added and purchase return and sales will be subtracted. But same thing. Here I took sales return at cost. Same way, sales is at selling price. Same way, sales is at selling price. Therefore, I'll also have to take that at cost. Now, what is the value of goods given? 40,000. The sale price, the selling price of goods is 40,000. Percentage of profit is on sales. So again, I'll put a bracket. I will put a bracket. What is my value? 40,000. So 40,000 less same rate 20%. 40,000 ka 20% is 8,000. So 40 minus 8, my sales ka cost is 32,000. My sales ka cost is 32,000. Now take the total. 5 plus 32, 37. And now take the final total. 133 minus 37 gives you 96,000. 133 minus 37 gives you 96,000. So, closing stock as on 25th March, what I calculated on 25th March was 1 lakh. Now listen guys, now this 96,000 what I have got, what is my reconciliation period? 26th March to 31st March. So this is now the value of stock which will be my stock on 31st March 22. When I prepare trading account, when I prepare balance sheet, this will go on the credit of trading and this will go on the balance sheet asset side. So see, I started, how do you interpret? I started with closing stock as on 25th March. I made all these adjustments and after making the adjustments, I arrived the figure 96,000. This is nothing but my closing stock on the balance sheet date, that is 31st March 22. This is my closing stock on the balance sheet date, that is 31st March 22. This is called as reconciliation statement. Take the stock before or after date, whatever is given, make adjustments by adding and subtracting, and the final figure what you get, that is your closing stock on 31st March 96,000, which will go in the balance sheet. So 1 lakh will not go in the balance sheet. Balance sheet is prepared on the last day of the year, 31st March. So 96,000 will go in the balance sheet. What is the logic of reconciliation? I didn't have this figure because I didn't have time. So I took my stock on 25th March. Whatever transactions you have done between 26th March to 31st March, you have adjusted and you arrived the figure of 96,000. Got it guys? Exactly same way, I will continue this video with the second sum. The only difference is, everything is same. But when I calculate the cost of sales, return and sales, in this sum, the percentage of profit is on cost. On sales. Next sum, the percentage of profit is on cost. So I cannot do it directly. I will have to make working notes. That is the different point. I'll just pause the video and I'll be back with the format of the second sum. Okay guys, continue with the second sum. After this, we'll wind up this video. Okay? Now as I told you, same points are there. The only difference is, previous sum profit percentage was on selling price. Here it is on cost. Previous sum because it was on selling price, we could do the calculation in the brackets. But here we'll have to make working notes. Let's read the sum first. Question number 2. From the following information given by SAP and company, prepare stock reconciliation statement as on 31st March 2. Again, the stock is before date. Closing stock as on 20th March 22, 80,000. Purchases 21st March to 31st March 30,000. Purchase return for the above period 6,000. Sales during the above period 50. Sales return for the above period 7,500. Now see. Company charges profit 25% on cost price. Previous sum it was 20% on selling price. Okay. First let's start the basic thing. Now we want to find out the closing stock on 31st March. They have calculated on 20th March. So first we'll have to take that as the base. So come to the statement. Closing stock as on 20th March 22, that is 80,000. Closing stock as on 20th March 22, 80,000. Okay. Next, add. Same way. First, what we discussed, it is before date. In the next class, I will take the sums after date. But now I am focusing on before date only. I am going very slow because the concept is very important. See, I am telling you honestly, Many students have the psychology, reconciliation college में क्या कर रहा है कुछ समझ में नहीं आ रहा है. Do it logically. Don't try to ratify. If you try to ratify, you will create a problem for your own. Just do it logically. This is a very, very simple part. In fact, I tell you, these type of sums get done in 10-15 minutes. So ledger mein it goes, you might take around half an hour because 5 to 7 minutes will go in preparing the format only. So in fact, these type of sums get over fast, and if you get the logic properly, these are very scoring. Okay, coming back to the question. Second, purchases from 21st to 31st March 30,000. Before that, you have purchased after 21st March, but before 31st March. So that will increase the cost of your closing stock. That is the reason we will add it. Exactly same thing what we did in the previous sum. So add purchases, put it in the first column, 30,000. Got it? What is next? Purchase return going out before date. So we will reduce it. So we will take it as a subtraction. Then see, sales going out, subtract. Keep it on hold. Last, sales return. Sales return, it is coming back. So I will add it. Right there. Add sales return. But what I told you, when we record sales and sales return, it has to be at cost. When we record sales and sales return, it has to be at cost. Now this amount is 7,500 is at what price? Selling price. So I cannot write 7,500. I'll have to deduct the profit. Previous sum, I straight away deducted the percentage from 7,500 because it was percentage on sales. 7,500 is my sale price and the percentage was also on sale price. But here see, percentage is on cost. So I cannot deduct directly. I'll have to make a working note, put in brackets, working note number 1. Put in brackets, working note number 1. Let's make it, you'll make it below the statement I'm doing on the right side. Working note number 1, heading will be calculation of cost of sales return. Calculation of cost of sales return. Okay, now listen, again I am repeating why we are doing this working note, because sales return is at selling price but the percentage of profit is at cost. If both are at cost, both are at sales value, percentage or sales value, I can do directly, but the amount is sales and the percentage is on cost. So what you will do? Profit percentage is 25% on cost. Mathematical equation. Let the cost be 100. Let the cost be 100. Profit is 25%. So add profit at the rate of 25%. 100 plus 25 gives you 125. That is my sales. Therefore, my sales is 125. Now listen. This figure of 7,500 of sales return is at sales price. What I want to find out is cost. So what I do? See, in terms of equation, sales is 125, cost is 100. I know the sale price. So what you will do? If 125 is 7,500, I want the cost. What is my cost? 100. So 100 is how much? Cross multiply, get the answer. If you cross multiply, you get the answer as 6,000. Therefore, my cost of sales return is 6,000. That means the goods which were having the sales value of 7,500, uska cost is 6,000. Okay, uska cost is 6,000. Now you guys all can check. What is my percentage of profit? 25% on cost. See here, cost of sales return is 6,000. 6,000 में 25% add करो. 6,000 का 25%. देखो 1,500. So 6,000 plus 1,500. Automatically आ गया 7,500. Clear? So the selling price of 7,000 has a cost of 6,000. Come back to the main statement. Against sales return, write 6,000. We have put in brackets working note. So 30 plus 6, 36. 80,000 में 36 add करो. So you get 1,60,000. 80,000 में 36,000 को add करो. You get 1,60,000. Got it? The difference between the first sum and the second sum is only the working note. Again I am repeating why we have prepared a working note in this sum and not in the previous sum, because previous sum में sales return का amount was selling price, which always has to be selling price only. Percentage of profit was on sales, so I directly applied. यहाँ पे the percentage of profit is on cost. But sales and sales return का value is selling price, so I cannot apply that. Getting it? Chalo. Continuing with the deductions. Come to the deductions part. Less. First. Purchase is done. Now, purchase return. Going out. Purchases are always at cost because you are buying from outside. So, purchase return, that is 6,000. Purchase return, that is 6,000. Okay? Next, what is pending? Sales. What is the amount of sales? 50,000. Now listen. Again the same thing. Sales 50,000 is at selling price. I cannot write here 50,000. I don't want 50, it is selling price. I want cost of that 50,000. So again, I will make a working note. Again sales. Put in brackets. Working note number 2. Okay? Come here. Of course, I can do it in brackets also because already I have taken the equation in working note number 1. But we'll do it again. Working note number 2. Calculation of cost of sales. First was cost of sales returns. Now it is cost of sales. Now listen. Percentage of profit applies to the entire company. You cannot have a separate percentage for sales and separate percentage for sales. So what will happen now? ये जो first part किया ना, no need to write it again because it is the same thing. This same thing will apply here. So now what we'll do? What is my sales ka amount? 50,000. So we'll directly show the second part. So what you will do? If 125 is 50,000, 100 is how much? Getting it now? If you all want, write it. No point in wasting time. Let the cost be 100. Add profit 25%, 25. 100 plus 25, 125. That will be the same thing. Okay? Substitute 50. Yeah. Get the answer. 50,000 into 100 divided by 125 gives you 40,000. Therefore, my cost of sales is 40,000. Therefore, my cost of sales is 40,000. Cost of sales is 40,000. Clear? Come back. written sales, working note number 2, that is 40,000. Clear? That's it. Take the total. 40 plus 6, 46. 116 minus 46 gives you 70,000. This is the stock which I want for the purpose of balance sheet. Last day of the year is 31st March. So against this you will write closing stock as on 31st March 22, 70,000. Closing stock as on 31st March 22, that is 70,000. Clear, guys? So I'll repeat. Stock was taken on 20th March, but balance sheet mein I want last day ka stock, that is 31st March. So to this value of 20th March, I have made adjustments and arrived at the figure of balance sheet date. This is called as reconciliation. Reconciliation means getting to the day which you want, that is 31st March, from the date what you have calculated, that is 20th March. So adjust 20th March ka stock by making addition and deductions and get the value on 31st March. This is reconciliation. Got it? The two sums what we did right now were before date. I am not extending this video. I will take after date ke two sums which are there in this sheet in the next class, and in the next class we will also take one or two sums from our original question sheet. This is the base. Of course, initial 4 sums are only on purchase return, sale return. There will be other adjustments also, but initial sums I am just focusing on the base. Okay guys, that's it for today. I am winding up the video here. In the next class, first we will take this sheet ka question 3 and 4, which are after date. Concept will be the same, but the things will reverse. That we will see in the next class. See you all in the next class. Till then, take care guys. A very good afternoon guys. In the earlier class, we did the concept of stock reconciliation statement and we solved couple of sums where the point was the stock was taken before date. Now in this session, first I am taking that extra question number 3 and 4. We did 1 and 2 last time. The only difference here is all the adjustments are same, but 1 and 2 were based where the stock was taken before date. 3 and 4 are after date. Okay? Now understand the concept what we are going to do. Say for example, my balance sheet ka date is 31st March. Previous class में 2 sums में the stock was taken before 31st March. Now what has happened? 31st March has passed. Few days are gone. Say for example, instead of 31st March, you take the stock on 7th April. So now what will happen? We will have to do the reconciliation from the next day. 31st March के बाद next day is 1st April to 7th April. Whatever transactions have taken place in this period, we will have to adjust. Okay, again, the third and the fourth question may I am just keeping transactions for purchase return, sale return. Okay, let's take one by one. Purchases. What we did in the last class, you took the stock before date. So whatever transactions were there from the date of stock till 31st March, we added because the goods came in. Now listen, we have to do the opposite, but understand the logic. Whatever goods I have purchased from 1st April to 7th April, they have come in, but they have come in when? They have come in between 1st April to 7th April. So the stock which is there on 7th April includes this purchase, but I want the stock on 31st March. So what happened? Whatever I have purchased was not there on 31st March. It came after 31st March, but it is included in the stock of 7th April. But I want 31st March. So what we did in the last class? We added because it was before date. Now it is after date. It came in this period, but I want what happened before this period, that is 31st March. So what I will do is purchases I will deduct. I will deduct the purchases. Earlier class mein I added, now I will deduct. We have to do the opposite, but understand the logic. Got it now? Again I am repeating. Stock is taken on 7th April. I want stock on 31st March. Goods have been purchased from 1st April to 7th April. Therefore, it is included in the stock of 7th April. But I want stock on 31st March. On 31st March, these purchases are not to be there. Therefore, I will deduct. Coming to the next. Purchase return. Now it is obvious. If purchase I am deducting, purchase return I will add it. But what is the logic? Whatever I have purchased, okay, between this we deduct it. Now returns. Returns means what? It has gone back. I have sent in this period. I had, understand the logic, I had till 31st March, but between 1st April to 7th April, I gave it back to my creditor, I gave it back to my supplier in the form of purchase return. Now, I want to know the stock on 31st March. On 31st March, it was with me. I gave it in this period. So, my 7th April ka stock will not include this. But, on 31st March, it should have been with me. So, what I will do? I will add. See, it's obvious. Purchase को less करना है तो purchase return add ही होगा. But you should know the logic. There what we did in the earlier class? Purchase, we added. Purchase return, we subtracted. Coming to the next part. Sales. Now what you will do to sales? What is sales? Goods going out. Again obvious. If I have deducted purchase, sales I will add. But logic kya hai? I sold the goods from this period to this period. So in this period, the goods went out. But I want stock on 31st March. I sold it after this date. But 31st March ko to mere paas tha na. So this doesn't include. So what I will do is I will add. Same logic. Sales, you will add it, but at cost. When you sell goods, it is at selling price. Now, when I record it as a part of my reconciliation statement, what we did in the earlier class, I will add it to my cost. So for that, I need the information for profit ratio. Two sum what we did, one sum the ratio was on cost, one sum it was selling price. The same point is coming in the third and the fourth question. First, second, third, fourth, all four are having same adjustment. The difference is first two before date, next two after date. Similarly, sales return. Again, but obvious. अगर sales को add कर रहा हूँ, sales return minus होगा. Why? Because customer has given it to me back. Now what happens? So customer has given it to me back. So it has come back to me in this period. So जो 7th April का stock होगा, उसमें वो included है. I don't want this. I want my stock on 31st March. This sales return has come in this period. The stock includes that because it has come back from the customer. But it is not a part of 31st March ka transaction. Therefore, I will less. So in short, earlier class mein purchase we added. Now we will subtract. Purchase return we deducted. Now we will add. Sales we deducted. Now we will add. Sales return we added. Now we will subtract. I showed you the logic. Again in the sum I will show you the logic. Okay, let's take the question. You all have below the video word file है जिसमें question number 3 and 4 are there. Previous class में below the video word file में there was question 1 and 2. Now there is question number 3 and 4. Okay, let's take that first. And please excuse me, I am having a bit of cold, so maybe my voice may not come clear. Okay, question number 3. Let's see. From the following information given by Mars and Company, prepare stock reconciliation statement as on 31st December 22. Closing stock is given 7th Jan. See now, balance sheet ka date is 31st December, but stock is taken on 7th Jan after date. Purchases from 1st to 7th Jan, purchase return for the above period, sales during the above period, and sales return for the above period. Again, company charges profit of 25% on sales. My balance sheet ka date is 31st December and closing stock is taken on 7th Jan. Let's take that as the base. Right. Closing stock as on 7th January 23, that is 2 lakhs. Okay. They have physically counted the stock on 7th Jan. We will reconcile and we will get the stock figure on 31st December. What I told you? First, we will add. Okay? Now see, what I told you. Purchases we added, now we will deduct. Purchase return we deducted, now we will add. Second point is purchase, which will be deducted. I showed you the logic why. Purchase return. So what I do? Add first purchase return. Again I am repeating why we will add. See, the stock is taken on 7th Jan. My purchase return ka figure is 2000. This 2 lakh doesn't include this 2000. Why? Because this is the return which has come for the period 1st Jan to, which is gone for the period 1st Jan to 7th Jan. Now, on 31st March, this was with me, na? So when I say 7th Jan ka jo 2 lakh ka stock hai, this 2000 has already gone. So this 2 lakh doesn't include that purchase return. But I don't want this transaction. I want for balance sheet purpose what is my closing stock on 31st March. 31st March को मेरे पास था, 7th Jan के पहले वो निकल गया, लेकिन 31st December को मेरे पास था, 7th Jan को वो निकल गया. But my balance sheet wants the figure on 31st December, therefore I will add it. So add purchase return, that is 2000. Clear? Earlier class में we deducted purchase return. Next, sales during the above period 70,000. Again see, you have sold in the period 1st Jan to 7th Jan. ये पीरियड में वो निकल गया. I want my stock on 31st December. 31st December को it is my stock. It is sold between 1st to 7th, so it is not included in this 2 lakhs. So now what I will do, I will add it. So second, sales. And what I told you, when you record sales or when you record sales return, it has to be always at cost. अभी देखो, this 70,000 is at selling price. Now what is the percentage of profit on sales or cost? It is 25% on sales. So because the amount is on sales and the percentage is also on sales, I will do the calculation in brackets only. So put a bracket, 70,000, उसमें से what is the percentage given? 25%. So 70,000 में से 25% को माइनस करो, you get answer as 52,500. So 70,000 में से 25% माइनस करो 52,500. As I told you, initial sums में there are no transactions other than purchase return, sales return, purchases and purchase returns. Okay, 52 plus 2, 54,500. Take it in the second column, add it to 2 lakhs. So it becomes 254,500. Okay, and this will be the total shown in the second column, after which I will take the deduction. Okay, so again I am repeating. Earlier class में both the sums में purchase return sales we deducted. Why? Because it was before date. Now we are adding it because after date. Don't try to mug up. See the logic, see the explanation what I do. Now listen, come back to the starting. Purchases. Obvious है. Purchase return we have added. So purchases we will minus. Now see, understand the logic again. I have purchased goods from 1st Jan to 7th Jan. So ये जो मेरा 2 lakhs है, understand the logic and don't mug up. ये जो मेरा 2 lakhs है, that includes this purchase of 40,000. I have purchased this 40,000 from 1st Jan to 7th Jan. So 1st Jan to 7th Jan के बीच में, in that period this 40 का stock has come, which is included in this 2 lakhs. मुझे 7th Jan का stock नहीं चाहिए. I want stock on 31st December. Should I have this goods on with me on 31st December? No. मैंने ये period में purchase किया है. So it is included in this 2 lakhs. 31st December को ये मेरे पास नहीं था. I did not buy, so I don't want on 31st December. So इसमें से निकाल दो. Remove it from here. Therefore we are deducting. कितना है मेरा purchases? 40,000. So right there. Getting it now? I want my stock on 31st December. Next. क्या बचा? Sales return. Again, see the logic. Sales return. Customer has given it to me back. मेरे पास ये period में आया. It has come to me in that period. It has come to me in this period. So it should be a part of the stock after 1st Jan. It is included in this 2 lakhs, but मुझे चाहिए stock on 31st December. 31st December को मेरे पास ये नहीं होना चाहिए. It is included in 2 lakh, therefore I remove it. And again the same thing. Sales return का sale price दिया हुआ है 10,000. I want the cost. So from this 10,000, I will remove 25%. 10,000 का 25%, 2,500. Therefore, my sales return here is 40,000. So 40 plus 7,500 gives you 47,500. Okay, that's it. Take the total 254,500 minus 47,500, 2,07,000. Now listen, 2,07,000 is my closing stock. Which day? This 2 lakh is closing stock on 7th Jan. I want my closing stock on the balance sheet date 31st December. So against this you will write closing stock as on 31st December 2022. So the stock which was 2 lakhs on 7 Jan, I have gone backwards and I got the stock on 31st December. Previous class में क्या था? You took the stock before the date. You went forward. Here I have taken forward date पे stock. I am coming backwards to my balance sheet date. That is the reason what we did in the first 2 sums of the previous class, we are doing exactly opposite. Got it? Now exactly same way, I'll continue with question number 4. Same thing, again the same point. Question number 4 में profit percentage is on cost price, therefore I will do the working note. I'll just pause the video and I'll be back with the format of the next one. Okay guys, continuing the video with question number 4. As I told you, same sum, but only the difference is percentage of profit given in terms of cost price. Let's see. From the following information given by CDR and company, prepare stock reconciliation statement as on 31st March 22. They have given you closing stock on 10th April, purchases from 1st to 10th April, purchase return for the above period, sales for the above period, sales return for the above period. The new point, of course, new for today, but same like yesterday, but the previous class. Company charges profit of 20% on cost price. Let's start. Stock reconciliation statement of CDR and company for the period 1st April to 10th April. They have taken the stock after 31st March, that is 10th April, and we want to go backwards and get the stock on 31st March. So first, let's take the stock what they have taken. Closing stock as on 10th April 22, that is 60,000. Closing stock on 10th April 22, 60,000. Okay? As we discussed, purchases will be deducted because you have purchased from 1st April to 10th April. Okay, so it is that purchase is included in the 60,000. I want stock on 31st March where there was no purchase of this amount. Okay, so that will be deducted. We'll keep it pending. Next, what you have? Purchase return. Purchase return is always at cost, so I will add first purchase return, that is 3,000. Okay, purchase return, that is 3,000. Next, sales during the above period 36,000. Again, defining the logic of purchase return and sales, why we are adding it. What is the logic I told you? Purchase return, goods have gone out. Sales, goods have gone out. Goods have gone out in the period 1st April to 10th April. I want stock before 1st April. It has gone out after 31st March. But 31st March ko mere paas tha. It has gone out, not included in the 60. Therefore, I am adding it back. As I told you, sales, you have to add, excuse me, add at cost. So we will make a working note. Brackets may write working note number 1. Again, I repeat, why we are making the working note. The reason is previous sum mein percentage of profit was on sales. Now it is on cost. Okay. Working note number 1. Excuse me. Calculation of cost of sales. Calculation of cost of sales. Now see, last line. Company charges profit 20% on cost price. Had they mentioned selling price, I would have done it in brackets only. Now, my sales is 36,000 at selling price. I don't want 36. I want the cost of that 36. Percentage is on cost. So what do you do? Same like earlier class. Let the cost be 100. Let the cost be 100. To that, add profit which is 20% on cost. 100 ka 20% is 20. So 100 plus 20 gives you 120. That is my selling price or sales. This 36,000 includes profit, but 36 is the value of sales. What is sales here? 120. What I want? Cost of sales. So now see. So what I do? If 120 is 36,000, 100 is how much? If 120 is 36,000, 100 is how much? Cross multiply and get the answer. That is 30,000. Therefore, my cost of sales is 30,000. Now see, you all can cross check. Kaise? My cost is 30,000. Profit is 20% on cost. 30,000 ka 20% dekho, 6,000. So 30 plus 6, you get outside 36. Selling price as 36,000. So come to the statement. Sales, working note 1, right there. 33 plus 30 gives you 33,000. 60 plus 33 gives you 93,000. 60 plus 33, 93,000. From this, let's deduct. Same logic. Purchase return we have added. So purchases we will subtract. What is the purchase for the period? 20. Again I will explain you all the logic. See, I am explaining all again and again so that in the next class onwards I don't waste time on purchase, sales return. 20,000. Why I deducted? वापस explain कर रहा हूँ. I purchased for the period 1st April to 10th April. So 10th April के stock में what I purchased in this period will be included. But मुझे 1st April to 10th April का stock नहीं चाहिए. I want 31st March. This purchase was made after 31st March. Included in this. So उसको निकाल दो. Got it? And same way, what remains? Sales return. Right. Second, sales return कितना है? 3,000. But sales and sales return is at selling price. So again, since the percentage of profit is on cost, I'll make a working note. Working note number 2. Okay, this was working note 1. Now, working note number 2. Calculation of cost of sales return. Calculation of cost of sales return. Now listen. Cost 100. Profit 20. 100 plus 20, 120. No need to write it again because that remains same. Now, what is the selling price given? 3,000. Selling price sales that is 120. So straight away we will do. If 120 is 3000. I want cost of sales return 100 is how much? So 100 into 3000 divided by 120, that gives me 2500. Therefore, my cost of sales return is 2500. Again, check karo. 2500 का 20% लो, that is 500. 2500 plus profit 500 gives you 3000. Come back, less sales return 2500. So you get there 22,500. So 93 minus 22,500. You get here 7,500. We get here 7,500. Clear? And this 7,500 will be my closing stock as on 31st March 22. Closing stock as on 31st March 22, 7,500. Okay guys, so I'm just brushing up what we did today. Repeating again, previous class में both the sums were before date. Now I've taken the stock after date. Whatever I did in the previous class, we have done exactly the opposite. वहाँ पे purchase and sales return were added, यहाँ पे minus. वहाँ पे purchase return and sales were deducted, here I have added. Logic I have explained you all multiple times in this video. That's it for today guys. I am not extending this video because from the next class I will be taking transactions other than purchase, purchase return, sales, sale return. So before we meet in the next class, please see to it whatever I have done in the previous class and whatever I have done in this class, you all are thorough with that, because if you all have not understood this, you will face a problem when you see the next class ka video. So please see it on a repeated basis. You all have that advantage. In spite of seeing on a repeated basis, you are not able to get it. Connect with me. Again, I will explain you all. But the way I have explained, 99%, if you watch the videos for 2-3 times, you should not be facing any problem. But in case you are facing it, do not be hesitant. Connect with me. I'll give you the brush up. So that's it. I have done 4 sums, all the 4 covering basics. Next class mein, we will take further transaction. This is a very small part. Maybe another 2 or 3 classes max. This part should get over. Remember, this is not a separate chapter. This is second part of inventory valuation. That's it for today. See you all guys in the next class.